Is Santa Claus real? Actually, I take that back. Is is the Santa Claus Rally real? Have you heard of this? This is the phenomenon that happens every time in the year. The stock market's going to rally, and they call it a stock market rally. In today's show, we're going to talk about whether or not the Santa Claus Rally, as it's called, is real. Let me bring in my co-host Tony Shore to help with this.
Woo! I feel we're in the Christmas spirit, right? I mean, come on.
So for the viewers, you could see that Tony's got some sort of something going on.
It's a reindeer racing helmet. I have a reindeer racing helmet on, and I don't know what happened to my ear over here. Oh, there it is. Yeah, there we go.
Welcome to the show, Tony. Have you heard this Santa Claus Rally before?
No, I haven't, but I love the Christmas theme this year. I have my Christmas Viking gnome.
You got some jingle bells going in there.
Yeah, are they ever going to end, or what's going on with that? Jeepers. There
So,
we go.
Welcome to the show, and happy holidays to you. This time of year, we did a show on the Christmas movies with financial lessons, and you really took off with that one. If you haven't watched that, the viewers,
that's a good one.
Just watching that now. Have you heard of the Santa Claus Rally? Have you heard this term? If you watch CNBC or Fox Business, you're going to hear someone talking about it.
The Santa Claus Rally? What in the world are you talking about, Dan?
All right. So if you are watching this and you don't know what it is, I'm going to explain to you. If you're a trader or you've been in the stock market trading, you've seen or heard people say the Santa Claus Rally. But what happened was in 1972, Yale Hirsch, he founded the Stock Traders Almanac. He came up with this term. He coined the term the Santa Claus Rally. The Stock Traders Almanac still exists. You can go there. There's a link below for those that want to learn more. And basically what he said is, he said during the last 5 trading days of the year, plus the first 2 trading days of the new year, that is the timeline that there's a rally. And what happens during that timeline?
People spend money.
Well, this S&P 500 rallies during those on average 1.3%. That is what the statistics say. The statistics since 1950, there has been a Santa Claus rally almost 80% of the time. 80%.
Wow.
Going up on average 1.3%. So you might say, wow, when is the Santa Claus rally coming in 2024? It would be Christmas Eve, December 24th through about January 3rd, I think, would be the last 5 plus the first 2 trading days, not days, trading days. And therefore we can expect to see an increase. Is that what our buddy Yale Hirsch is saying and the statistics are saying? I don't know. Now, before we go into a little bit more why this would even be the case, there is another little indicator here. The lack of a rally can be an indicator of tough times to come. So if you get up and you see a lump of coal in your stocking, then you know, all right, we're in trouble. So what do you think, Tony?
Well, I think it's great. I think we have the accurate headgear on for this discussion. That's important. I've got
wouldn't a tinfoil hat be better when it comes to making?
I've got a little. Like do you notice this is a little bit of foil right there, and
you might say, well, that's great. Since 1950, but what about the last 20 years? I don't care about what happened in the 60s. You're trying to forget what happened in the 80s.
Right. That's true. So, that's true. But I would imagine we're going to get into the why. And I have my own reasons why. What I think. I don't know. And you're going to tell us. But I would assume why. And most people I think, can figure it out. But
I want to get into your why. But before I do, past 20 years. So if we're looking since 1950, 80% chance. Past 20 years, it's kind of a coin flip. Kind of a coin flip if the stock market rally, a Santa Claus rally, exists or not. Some days, some years it went up, some years it went down, but overall, I got my death coin in my pocket still.
Oh yeah, you do.
Did a show on that. Let's flip the coin right now. Skull and crossbones means yes, we're gonna have a Santa Claus rally. Tails means no.
Okay.
Let's see.
Heads or tails? Heads.
Heads.
You're
So
gonna
that
have
means
a
we're gonna
rally.
have a Santa Claus rally.
Good.
All right.
I
So
don't know if people out there are going to want a financial advisor who's calling things on the flip of a coin.
my point is
Do that. Might not want to.
that my guess is as good as yours. And
Right.
even though statistics say we're going to go up during that Santa Claus rally, I don't necessarily buy it. But let's talk about why we would. What would be your reasoning why we would see this in the stock market?
I would actually assume that the stock market would have huge rallies based on the knowledge that consumer spending is up during this time of the year, because people spend like crazy over the Christmas holidays, over Christmas and New Year's, and we all this is when even sometimes the most frugal people during the rest of the year tend to splurge. And a lot of people, as Americans, I've noticed, we don't go out to Black Friday just to buy gifts for others. We're also buying, oh man, we need this at home. This is a good deal. So I think overall, people just spend like crazy, even more so than usual, Americans. We love to spend.
Okay.
Our economy and the markets are driven on spending. So if people are spending more money, the companies are supposedly doing better, and then the stock market does better. Am I right?
Yeah, that's a good point. And I think that's one of the most common reasons given for why any such anomaly or phenomenon like the Santa Claus rally does exist. I got some others for you, but you hit the big one, which is holiday shopping.
Yeah.
General optimism. People are in good moods usually.
Yeah. True.
So the general optimism is that you're going to have people spending and giving and investing and being happy. But you said the holiday shopping, that's the big one. And yeah, it's supposed to trickle down. So more people spend, more money for the companies, improves their bottom line, improves the bottom line. People are more inclined to buy the stock because it's growing. And so the stock price goes up. Here's one that is something that is often cited as a reason for it. And that's the investment of holiday bonuses. So the holiday bonuses go out and they take that money and they buy more stock, but not everyone gets money. Some people get what did your buddy?
Let's see here.
What is it?
It's a 1-year membership in the Jelly of the Month Club.
Clark, that's the gift that keeps on giving the whole year.
That it is, Edward. That it is indeed.
So that was from National Lampoon's Christmas Vacation.
Yeah. And he spent that money before he had it. That's why he was so upset.
Yeah, he did spend on the swimming pool.
Put a down payment on the pool.
So that not getting the Jelly a Month Club is, I mean, I would prefer that. That is, there's no price on that. But but people usually get bonuses. Those that get bonuses usually get them at the end of the year, and then they spend that. That's a theory. The other theory, and this was one that I heard a lot when I was a trader. I used to be a trader and day trading. Heavy volume days were always the most interesting, and there was an adage that said "sell in May and go away." That meant a lot of the institutional and big hitter investors were going on vacation, so the volatility or the amount of volume was going to go down. Actually, the volatility might go up because there's less volume. Same with during the holidays. So during that break of Christmas and New Year's, a lot of the institutional investors do go on vacation. So their trading volume is gone, which means that the retail investors have more control, if you want to call it that, of the market. And retail investors typically buy. They're not trading, they're buying, and they're feeling, all right, I'm going to invest. So you got the holiday bonus going, you got the institutional investors leaving, you got the retail investors pouring in. That's a recipe for growth on average.
Sure.
So You know, there I already did the coin flip, but I
Right.
couldn't. And then I couldn't think of any other reasons. But again, none of these are scientifically proven. So these are just what people think. But there's no guarantee this is going to happen. And the question becomes: is there going to be a Santa Claus rally at the end of 2024? And this could be you could be watching this next year. You could be watching this whenever. My answer is going to be the same. Is I don't know. And
Right.
anyone
Nobody has
telling
a
you
crystal ball.
right. Anyone telling you there's going to be one. I mean, if you're looking at the stats, then yeah, you can kind of go with it. But for retirees, which is what this show is all about, the way to play the Santa Claus rally is to not play the Santa Claus rally.
Well, yeah, if you're saying what you're implying here is some people might use this that 80% of the time there's this rally and we know when it's going to happen, or people think they know that it's going to happen during these certain times, they can then time the market
Yes.
to make money. Well, if too many people do that, the opposite is going to happen. You're going to have negative volatility and you're going to lose, but you should never try to time the market, even when something has happened 80% of the time. It's a crystal ball, and things have changed. I mean, the markets have changed the way they operate, and things do change. Right. Though I would say I would be surprised if the rally doesn't happen, because I would think all that consumer spending would cause the market to go up. It's logical because the market operates on consumer spending. Really, I mean, that drives it because of the companies.
It does, but when do you see those? Do you know what kind of spending is happening?
Yeah,
there's a little bit of a lag indicator there.
Yeah,
you know, we know. I mean, we could see the same store sales going up and so on, and we know people are spending, but isn't that already baked into the cake?
Yeah,
so I think the Santa Claus rally is more of a seasonal phenomenon that people get wrapped up into, use it to explain. Just so happens it's worked more often than not, but I don't think
it's not like there's been a 10% jump during that time.
Right. It's been, I mean,
of the time. If there had, I think more people would do it, and then of course it would negate itself. But 1.3% is
on average, right? But that doesn't mean we've had losing years. Last year, 2023, it wasn't a gain. So that and like I said, it's been a coin flip for the last 20 years. So anyone betting on this might as well just be playing.
Plus, when the market's already hit record highs and is due for a correction, do you really want to gamble it's going to go up even more? Like this year? I mean,
I will say that volatility is probably going to go up because a lot of people, the institutional investors, are going away. But you're right. Timing the market's just never a good idea. Never a good idea. So my conclusion would be the Santa Claus rally is real. I do believe it. Statistically, right? It's not a made up thing. It's something that has been said for almost 50 years now, right? And it's just something to know about and acknowledge. And when someone says it, you could say, yeah, I know what that is. But that's about it. I wouldn't adjust your retirement strategy based on this. You don't want to time things if you're not in the market. If you're in the market for the long term, don't say, oh, I'm gonna get out right after the rally, or I'm gonna pour in more and then pull out in early January. Just there is another adage, and I forget the exact saying, but it's as January goes, so goes the year. So a lot of people are looking at the January effect and saying, well, if we're up in January, that means we're going to have a good year. So maybe that's just them hoping. I think that's what it is. Again, we did a show on the presidential election, how not to change your retirement strategy based on the presidential election. I'd say the same thing about whether or not Santa Claus is real. Oh, Santa Claus rally is real. I don't want to.
Yeah, no.
Santa Claus, it's family friendly.
Santa Claus is definitely real, but is the Santa Claus rally in the markets real? Let's clarify that, please.
It's a real thing. So if you haven't heard about it, now you have. But what do you do with that knowledge? Take it, store it, use it in case you get on Jeopardy, and kind of let it go from there. That's the way I'm going to go.
Yeah. Well, you make a great Santa. You make a great Santa.
I think I'm going to call it there, Tony, and say that we're going to end this show on a good note.
Wait, no.
Where do you think you're going?
No, we're not.
Nobody's leaving.
Nobody's walking out on this fun, old-fashioned family Christmas. No, we're all in this together. This is a full-blown 4-alarm holiday emergency here. We're going to press on, and we're going to have the happiest Christmas since Bing Crosby tap danced with Danny Kaye.
I appreciate that, Tony. That's a great way to end it. I don't think there's anything more we have to say. Catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.